So welcome to our second webinar. My name is Erin Duddy, and I've been managing these webinars with the Center for Sustainable Finance and Private Wealth at the University of Zurich. And I am joined today by Britta Gruenig Castelli. She's the head of wealth owner programs, and also Carsten Hjelde. And he has actually been a part of one of our programs a few years ago. So he's one of our alumni, and he's also very experienced in impact investing, and actually, as I've been talking to him, a lot of other things that are really interesting as well. So I'm sure he'll share that in his presentation. So if you missed our first webinar, we have a Medium article up about it, giving the summary, and also it's recorded on our YouTube channel and also on SoundCloud in case you don't feel like watching but you still want to listen. But today's topic is the journey of an impact investor, so specifically overcoming barriers in impact investing. Again, Britta has a lot of experience helping people overcome these barriers, and Carsten has lived it. So they'll be able to give a lot of really valuable insight. It's set up kind of in 3 blocks. They're all about 20-minute blocks. And you're welcome to submit questions in the Q&A kind of tab below. And then we'll try to get to them as we're going through the different parts. We'll either be answering them through the segments or at the end of the segments. But if we don't get to your questions, then we'll answer them in the Medium article that we write in the next week. So yeah, that's the structure, format, and everything. And so that's all from my side. I'll be hanging out in the background, and Britta is going to take over now. So welcome, Britta and Carsten.
Awesome. Thank you so much for organizing and setting this up so well, Erin. So everybody, it's such a pleasure to see so many of you live here from around the world. It's just fantastic to see interest in moving capital towards impact, despite all the virus and chaos that is happening in the world. So let me just get started by sharing some slides. So let me put this on presentation view. Does this work for everybody? Can you see the slides well? Carsten, yes? Excellent.
Yeah.
So just to make a first point here, the insights that are shared today are based on the experience that we have preparing impact investors from around the world and getting started on their journey. We've been doing this for 5 years now, and we have over 140 alumni that are sitting all over the world and doing amazing things. So what we're sharing here is based on that, and I just wanted to start it off. Now, we're talking about the journey of becoming an impact investor. What does this journey look like? And why do we even talk about a journey? The thing is that when people go and they get started, they get excited about doing impact investment, and maybe they go to conferences, well, not right now, but maybe they read awesome things about people. What have they achieved with their money? The thing is, people who are sharing at these conferences are also somebody like Carsten, who is sharing today all the amazing things that he has achieved in his family and with his portfolio. It was not always an easy journey for each one of them. And so that is why we talk about the journey of becoming an impact investor, and in particular, what are the challenges and the barriers that you have to overcome on the way. So on the slide, you see just a very stylized hero's journey. You get started, you're like, whoa, this is awesome. I really want to maximize what I can do personally and contribute to a better world. This is the first excitement stage. Your motivation is really high. But what happens after that? Maybe you come back home and you start your soul search and you're just like, I really don't know how to get started. What is happening now? Like, where can I get support? I don't even know which questions to ask. I don't know where to get started. There's such a confusion of terms. People are starting to greenwash. You know, what this bank is showing me, is this an actual real impact investment? So questions over questions. This is like the first support vacuum where your motivation might be lacking. And it's important to know that this dip is going to come. and that you don't have to give up because there's a lot of support on the way for all of you out there. So we want to tell you a little bit, how can you get over this first block, how to get started. Then maybe you gain clarity. You're like, all right, I know what I want to do. These are the things, I just need to implement them. So what happens after that? You might have a second motivational dip. You know, a hero's journey, nobody said it was going to be easy. You've seen all the movies. It's a bit like this. There are challenges to overcome. So the second dip is usually when you get to implement your strategies. We called it here the implementation trenches. The challenges are different for different people, but we have noticed that the two main blocks that we're also addressing today are how do you actually align your family, and how do you build your impact portfolio in practice. So again, when you come to these stages, there is support. Please don't give up. It is worth it. And then you can, in the end, refine and build your impact strategy and become a real leader in the field. So this leads us exactly to the 3 points we're covering today, the 3 barriers of impact. The first one, how to get started. Second one, how to align your family. And the third, how to start to build your portfolio. So Erin, did you want to close this off in a certain specific way, or shall we move over to the first barrier?
Yeah, let's move to the first barrier.
Excellent. So when we come to the first barrier on the journey towards becoming an impact investor, the question is really, how do you get started? Participants in our program come from different backgrounds. Some have a financial, business, or law background, and they might want to know much more about what actually has impact in the world. What are the key issues that need to be solved? What are the best approaches to having maximum impact? So for all of them, it can be hugely satisfying to bring in their business background and leverage it for the benefit of the planet and people. We have other participants. They come in and they might have a creative or a social philanthropic background. For them, the question is maybe, I've never even spoken with my financial advisor. I don't know what is in my portfolio. I don't really know which language I can use to make myself understood. I know what impact I want to have, but what about my financials? I don't know the terms. I don't know where to get started. Whatever the situation is, the key challenge for for everybody participating in the program is really how to build your own capacity. So you can see this here on this very simple slide that I'm showing here. Key is to carve out the time and the resources to gain clarity, understand the field, understand yourself, and what is it that you actually want. So with this, I would very much like to welcome Carsten, who's here with us today. And he gains an understanding of the field. He understands himself and what he wants really well. And I would like to ask you the first question, which is, how did you personally get started on your journey of becoming an impact investor?
Thank you, Rita, and thank you very much for having me here. Perhaps if you take down your sharing, then I can share on my screen, so I can explain a little bit about the background here. So I was working in a business which was, I'll just find that here, which was predominantly family owned, and this was sold in 2017 in the spring. The business I came from was a biorefinery of fish. So very short explanation of that is when you slaughter a salmon or a fish, the fish goes to the shop, we buy the parts, put it in the refinery and create oils or liquid proteins, etc. So this was already an impact company. But anyway, this was sold, and on basically over a weekend, I was trying to figure out what to do with the rest of my life. And I didn't have a plan. And I think also when people are going in to be impact investors, they're not necessarily starting with a target to be an impact investor. The most start, at least for me, the situation was more what I want to do with my life. I have some assets, I have some possibilities, and at the same time, My father transferred the wealth and assets from himself to my two sisters and myself. So we had that situation as well. And through some advice from friends, I started attending some conferences and continued on that path. So basically what I did was to connect with a lot of people, all within the fields I found interesting. That was to improve the world. It was on political spheres. It was on food production. It was also on the hardware program. And all these things together were like changing my mind a little step by step. And I think the key here is also to look inside yourself. How do I want to be? What I want to do with my life? And on this path, I was also super engaged in talking to people. So I would be on nearly every conference. I would go around to random people, talk to them, just present myself and talk to them. At that time, there was no change in the portfolio or any attitudes towards that. It was more figuring out what to do with my life. And one key ingredient is that when you meet a lot of people, you connect better with some. And I had a background in a business where I felt like I was very much in command of my regular work. I knew the network in that business, but now I had to start from scratch in a new world. And doing that was very helpful for me to, like, what should I say, refine my way. And that was the early stage of this scouting about. So I think that was the start. And during that period, I also realized that impact investment is what we want to do. So that was like the first step to that. Should I keep my screen shared, Britta, or do you want to?
Yes, please. No.
Yeah. Okay.
Okay, that's good as well. Wonderful. So the question was to find yourself. So how did you do that?
I'm still searching. This is an ever-going thing. But it's about cleaning the mind. I have some slides so that I can share with you a little bit later. But it goes very much about in and out of what I'm doing and what I'm not doing. Life is being filled up by history and what we. Family we were born in, schools we went to, businesses we worked, people we met, and all this are shaping us. And if I jump forward to today, now I'm trying to shape myself. So I deliberately disconnect from things. I take things away from my life because I know there's so much I would like to feel in it, of new things. And this is hard sometimes. It's like reducing certain areas where you're comfortable and going into other areas. But that's I'll see. I can just jump to that. I think I have a slide on a little bit on what to. Here I will find it. Yes. So this is a little bit about cleaning the mind, and I find particularly in any kind of life there's a lot of noise. There's a lot of things taking away the attention, and I've been trying to reduce the impact of people invading my mind without my consent. I think that's the key to be prepared, and at the same time be polite. I mean, it's not very hard when people approach me to say that, thank you, looked into this, but this is not interesting for me, and like, don't spend regular time on things I don't like. I can spend shorter times on it, but on the regular basis, try to take this away. So when it comes to like investments, I'm not so fond of the financial sector. I think like a very, very, very broad picture is that they're overpaid and underperforming. At the same time, there are some very, very good people and some high quality individuals which are over delivering, and so. But as such, that's like. To a large extent, they are sellers and they want to sell a product and they're making a margin on that, and they're not taking like my perspective. And this also goes with like consultants. This also goes with startups. I think several of startups do not have sufficient respect for money. So this is like one way of reducing it. I just jump to. I can come back to that a little bit because that's a bit on the on the things later. But I think the key point is to be master of my own mind. I think that's the key ingredient.
And that is also something that I am noticing. I'm coaching participants of the Harvard program, currently a dozen from around the world. And it's very, very important. What do you say no to? And I think also on the question of finding yourself and what is it that you really want to achieve in the world, it's sometimes like you are peeling away layers of who you are not to become who you really are. So that's like a key theme that is popping up. So maybe if I could ask Carsten just one question. The Harvard program that you participated in, so the IRI CSP program, what kind of role did it have for you when you got started on the journey? In a nutshell.
Yeah, first of all, it was a perfect timing because we sold in March. I spent like the summer trying to figure out things, and in the autumn I started on the Harvard program. The good thing was I met a lot of like-minded people. I got in contact with the whole CSP program managers, leadership, and the thinking behind impact investment. So it like there was a lot of, it's like a puzzle, and you've been looking for some parts, and suddenly you find like several of them at the same time. So that was very useful for me. Also, during the program, we were doing due diligence of fund managers. And this was also interesting because we had, prior to that, in the process of selling our company, I've been in contact with several fund managers interesting to buy the company. And I saw the due diligence from the perspective they had, and also from the perspective when during the Harvard program. So that was like giving me two angles on the same thing, which is helpful in clarifying, and it's perhaps a little brutal to say within this community, but the conclusion for me is that we are probably not doing venture capital or private equity funds. This is there are good things out there, but for us it's too much time to do sufficient good due diligence and good follow-up to spend focus on that. So that's part of the reason why we've taken that to the side.
And I think we're going to go more into the portfolio building in the later part of the presentation. I saw Erin popping up. Yes, Erin, is there a question?
There are several questions, and I have one really quick one. That's there's a lot coming up, and we'll get to some of them when we're in the later parts. But this one is when you are in the scouting phase or talking to everybody, what are some of the unnecessary detours that you go through or you should avoid? Oh,
this is a good question, and I like to be polite. Try to maintain that, and sometimes you end up at conferences where you see that this is not my key ingredients to talk to, or you get up into conversation where which is not interesting for me or not relevant, and there will be a lot of detours. And my thinking is also at the same time accept some of the detours, accept the people really well in any extent. So I had several detours which has led to some good connections or some positive outcomes afterwards. But at the same time, try to not to bring the detour to be a regular part of your life. That is that's probably one thing I try to follow up. So I don't like continue interacting with things which I know is a detour on a regular basis. But at a longer time, it has to be accepted that there are detours. And also at the same time, in order to find the good parts, you need to have several detours. So you need to search a little bit broader, go a little bit deeper sometimes to get to where you want to be.
And maybe if I can just maybe if I can just add something on that. What I'm observing is that sometimes people are starting without having a framework in their mind that Carsten clearly has very much laid out. And I would recommend everyone to do that. If you start in impact investing and you go to a conference or whatever, you go to your bank and you really don't know what you own and what you want, you're not going to get it, right? First, you need to be crystal clear. Who are you? What do you want? What is the impact you want to have? And for all of that, what I have seen now is very helpful for the people to get an understanding of their why. Start with why. Why do you want to do that? What is your theory of change? And then afterwards, start to understand the mechanics of impact investing. What are the different approaches out there? Who are the players? Where can you get support? And so on and so forth. And once you have this framework in your mind, it becomes much simpler to then accept or reject an offer.
Great.
Yeah, completely agree, Britta. It's having the framework in the back of the mind. It's like a map of navigating. I know there are some dark spots, I will not go there, and there are some very good spots where I would like to go. So yes, it's key.
Yeah, great question and great answers. So the next topic that we have is aligning your family. What are the challenges and how do you overcome them?
Yeah, let's go there. So Carsten, may I ask you to stop your slide share and I will share mine. So here we go. The second barrier to impact investing, what we have seen from so many participants, is really aligning the family. Now, why do we talk about aligning the family? For most of the participants of our program, they are second generation or third generation, fifth generation members of family offices. And if you really think about scaling your impact, aligning the family makes so much sense. But it is a challenge. Each family constellation can be vastly different. There are very complex ones and more simple ones. But what we have seen is one of the very key considerations that engaging with any stakeholder means is that you can communicate in a way that your stakeholders can understand what you're saying. And so when you're looking at the slide that I'm sharing here, one very simple framework I would like to share with you today is how can you develop consensus with key stakeholders in your family. Let's just assume you have one family stakeholder that is key, and he is also a family member and the CIO of your family office. So to this person, would you think that it's a good idea to start to share with him that impact investing is really the best opportunity to reach an improvement for society and the planet on a large scale? That it's like the best mechanism to have a maximum impact really fast? Maybe not. Maybe for him, it would be really helpful to tell him about the IPO of Beyond Meat. That was, within the last 2 decades, the most successful first day performance of any IPO in history. So just consider the audience. If instead your key family stakeholder is somebody who has been driving the philanthropic agenda of your family for a long time, that person might not care about the financial performance. That person might also not really, care too much about getting the next generation educated on financials, and so financial skill building or so on. That might not be the argument to work, but the one that we are just trying to reach in this decade to get financing for the Sustainable Development Goals of the United Nations, and that we have a massive, massive funding gap, and that the way to really maximize impact there is to leverage the financial markets to get the solutions out there at scale. That might be something that works for somebody who cares primarily about impact. So who would then, as an archetype, be interested potentially in getting the next generation educated and building their financial skills? That might be somebody who is starting to think about their family legacy and starting to think, what will happen once I step down? Who will take over? Is the next generation in my family skilled enough? Are they engaged? Do they even care? Or will all, the wealth and all the businesses that I've built go to waste and fall apart? So for those kind of people, it can be very interesting to start to think about impact investing as one of the potential mechanisms to get the next generation engaged on a topic that they really deeply care about, which, a simple meeting with the banker might not do. Like, I've seen some statistics from a bank, so it was really interesting. They were surveying wealthy millennials, and, most of the wealthy millennials said they would rather go to the dentist than to meet their banker. So it might be interesting to just start looking into this. And impact investing is definitely something that gets, critical minds, it gives them a really good challenge. And for those people who want to make a real impact in the world, it's also the way to go. So here, this is what we mean when we talk about societal returns. So this is primarily somebody who cares about financial returns, somebody who cares primarily about the financial situation and financial performance, and experiential and family returns for someone who wants to keep the family engaged and the next generation educated. So as I said, it can be a roadblock, can be a very challenging situation, but it can also be an opportunity for some families. And in your case, Carsten, I would like to invite you now to share a little bit what your family situation was like.
Yes, so we inherited this from my father, and we are my two sisters and myself. So it was split on the three of us, and it was also decided that I should be in charge of managing this. And from there on, we had to align ourselves, and about, I would say, 6 or 9 months in that process, because one wanted to go more in direction of philanthropy. One wanted to have good returns, and I wanted to have focus on the impact. And I think the three of them are very aligned. So for us, we had a simple process. We also have a good relation between all the siblings and also with the parents. So this makes it very. We didn't have the hardship that I know a lot of other people have. And also in a situation where people are not in command and have difficulty influencing it, it's super hard. So for us, we did what we did, but at the same time, it's not like a permanent fix forever. It's something we are regularly updating and talking about in order to make sure that we are on the right track and that all voices are included. And I think that's a strength to do that, because it's also challenging sometimes if we don't know exactly where we want to go or have that openness. But for us, this has been a good process. But we spent time on it before we started acting upon it.
Mm-hmm. And so maybe I just try to put it in very simple words, to see that I and everybody who's listening understood. So what I'm hearing is that, like, within a very short period of time, the family company was sold kind of unexpectedly. And at that time, your father has also taken the decision that it's a really good moment right now to hand over to the next generation, which was also unexpected. And then you had an interesting role to play among your siblings, because one was kind of on that side of the financial returns first, and one was a bit on the side of the societal returns first. And you were leading this dialogue. How can motivations be aligned, and how can a strategy be formed? Is that right?
Yeah, that's correct. And I think a lot of people have the historical presumption that if you're going for high financial returns, you cannot do as good as if you are sacrificing returns. And I see this, it's still like an established truth that people are talking about either concessionary returns or high financial returns and high risk. I don't agree with that. I think within any line of business, you can make very good returns. You can do it in something bad like petroleum or weapon or whatever, and you can do it in good things like education or renewable energy. And it's a matter of specialization and focus. But from my perspective, you can have returns among any business line, to put it that way. But it's a choice of where you want to be, and from that mindset, also for us to see that we would all of us would like to move the world in a positive way. So we were also clear on that we didn't want to do negative things. We wanted to be in companies which we could be like satisfied with or proud of being having stakes in. So that was an easy part from that side. It was not like a big conflict, but it was more like to getting into it's possible to have good returns and do good at the same time, like getting this mindset established among ourselves and also for me. So yeah.
Yeah, and how's it going now?
It's been okay. Yeah, it's we've been satisfied, and we measure this compared to the stock exchange, etc., and the world index, and we're happy on the performance. Of course, as everybody would hit now, but at the same time, some of the philosophy here is to be long term. So we believe the companies we're in, they will come out of this with strength. We don't have any like particular things where we fear that the companies are going bankrupt now. So that is at least some comfort. But of course, at the moment, it's painful for everybody. But I think perhaps the worst crisis which is happening in humanity now is that all the governments are trying to solve the crisis by printing money. They are just printing money crazy. And there is one winner in this outcome, and that's people with wealth. It's people owning stocks or real estate or whatever. And this is another thing which will transfer wealth from poor people to wealthier people, which is not good. So I would like to see the governments to address this more deeply, to take care of people, because I think we're always going like a little bit small steps in the wrong direction in this respect.
Thanks for sharing. So Erin, where do we stand with the questions? Let's see what there is.
There's a lot of family questions, so I think this is a hot topic. The first one from my dear dad, John. How often do you talk with your family to ensure you are on track with everyone's goals?
Right. So first of all, it's just three of us, which makes it simple. I would say we meet about every second or every third month. We talk on the phone in between. We try to have like an overall strategy perhaps every second year to like modify it. But with that, we have a meeting at least once a quarter. That's like a minimum. But on several of the issues now, we're aligned, and that's the key thing. So of course there will always be something, and we're adjusting that.
Great, thank you. And the next one is it more important to focus on managing up, say to your parents, assuming that they hold the steering wheel of a family enterprise, or managing on your level, say your siblings and peers, when making the case for impact investing?
So for us, it was also very simple, because when my father transferred this, he was stepping back. So he was leaving all the responsibility with us. So we didn't have this, what should I say, the conflict some people have between generations. We have it all in one generation, and we're rather aligned there. So that makes it simpler for us. I think The challenging part is that a lot of the older generation are holding back too long sometimes, which is can be challenging in some families. Yes.
So maybe I can also share a bit from the crosscut of people that I have seen over the time. The situation is so individual that there cannot be one answer to that question. Like, one thing that I can recommend in general is to start to look for your allies. And that can be, you know, a very different situation depending on your own family. So it might be somebody that is in your close family, it might be in your extended family, it might be an ally that you have that is working in the family office, it might be somebody that is working in the bank. So just start to have a very much broader focus on who else cares about impact and for what reason, and then start to build from there. What I've also seen is that sometimes it might not be, you know, the typical, let's say, two-generational conflict that the older generation only cares about making money and then distributing it with philanthropy. That's of course the typical case. But I've also seen other situations where maybe within the same generation, there are siblings who just have different views. Maybe they even both care about impact, but they have different ways of expressing that. Like one wants to be more institutional and the other one wants to be more free-ranging. And maybe that would be a reason why they don't match. So it's very hard to say one general rule, but I would really say start with your allies and have conversations first about the strategy and what is it overall that you want to achieve and why does this matter to you, so people understand your motivation. Get prepared, get educated, that you know what you're talking about and you're not burning any bridges. And then afterwards, from there, you can start to go into implementation mode. And that's what I have seen is the most promising strategy.
Great. We have one question about, are there regional differences? So between family
to family
issues.
dynamics.
Yeah,
yeah.
family dynamics.
Yes. The short answer is yes.
Is there anything that that stands out in your mind?
So I would say one thing is, how old is the family money, without going into, you know, cultural specifics. But one question is this maybe a self-made person who then wants to move into impact? Is it a second generation from a self-made person in an emerging market that is a different mindset than in an established market? Or is it really a multi-generational family business that has been there maybe even for hundreds of years? So those are vastly different different setups that have nothing to do, so to say, with the world region or the culture, but really with just the wealth situation. Then I don't know, you know, how much I should go into the cultural specifics, because that's always hard to kind of stereotype. But one thing that maybe I can just mention, because I've also been leading programs on family business transition in Asia, and I felt that there was a different dynamics at play, for sure, which has to do with clearer expectations of what exactly the next generation is supposed to be doing. So that leads to a bit different dynamics in general between the generations. But I don't want to, you know, go into many more specifics, because as I say, like, every family has the very, very special setup that also nobody else can really see unless you work with that family very much in depth.
Thank you, Britta. So we have one last topic, and this is getting more into the technical parts about how do you build your portfolio.
Yeah. All right. So I'm going to share again my slide. Can you see it, Carsten?
Yep, can see it.
Great. Perfect. Whoop. So on the question how to build a portfolio, So this is the third main barrier towards investing with impact that we are observing nearly everybody is struggling with at some point. So one observation that I have, having dealt with all these different young impact investors, what happens to many of them is that they start with opportunistic impact investments. What I mean with this, maybe they go and visit a project during their holidays and they get excited about it. Or somebody sends them a proposal in their inbox. It pops up and they are considering going for it. Or they might know somebody in their network who is starting a social business, and so they are going to support it. Or they are just in a meeting with their banker, and the banker says, you know, this is the impact fund that we have. So they go for it. Is this bad? No, everybody needs to get started, and everybody should get started. And I think learning by doing is the way to go to some extent. But on the other hand, what are the missed opportunities by going for an opportunistic approach? What more could be achieved when you make up your mind about strategy? And how much more fulfillment do you also gain when you know that you have thought through what is it exactly that you want to do, and then you can see progress over time? So that's a question that I wanted to raise in the beginning. And then a second one on how to build your portfolio is also a key consideration. Do you want to do this on your own? How much hands-on do you want to be? How much time do you want to dedicate to this? And if you don't want to do everything by yourself, and I mean, some family offices, they have a staff of up to 100 people. How do you want to others? Who do you want to work with? Is it a family officer that is existing? Is it a banker that you have trust in? Is it a dedicated impact advisor that you want to consult on this specific part of your portfolio? So these are kind of considerations that I think are very helpful to answer and get clarity around. But now in the case of Carsten, we see here a representation of your portfolio. I'm always amazed. So this is a cultural difference that I can now clearly outline because we have a case in front of us. Some cultures are much more transparent than others, and Norway clearly is one of those cultures. So Carsten was willing to actually share his portfolio and be very transparent about what it is that he's doing. So Carsten, how did you get started building your portfolio?
Yeah, thanks, Britta. I can first about the trends. I think this is even within Scandinavia's difference. So in Norway, we can go in on each and every, online on every person, and you can see all the stocks the person owns. You can also see the sub-owning, so through holding companies down to the final company, and you can go in and see the accounts for every company. This is all transparent and open, so we're very used to that. Even in Denmark, it's more closed, and further away, it's hidden behind the curtains. So I think it's just a matter of being used to it. And if we're going to transform the world, one thing to say to fellow impact investors, we have to be more transparent. We have to be more open about wealth or assets or ownership, etc. And also tax is something we have to be open with, because a lot of people are now, they have vehicles which are registered in tax havens, and then they're doing impact, and we're registered in Norway. So we followed the Scandinavian tax rules, of course, but I think this is also a part of the mindset. So, but if I can share the screen here, Britta.
Oh, yes.
Mm-hmm. Then I will I'll just go into how we started. First of all, we tried to define it by purpose. So we took the SDGs, and we try to extract from the SDGs what do we see as the key challenges in the world, and that is it's too many people, it's too much difference, and it's too many resources required for a good life. So that was like a key thing for how we can work. And then try to find instruments working towards that. And like for the first one, if we can get young females in educating in developing countries into jobs, that's like a super tool of reducing the human growth, population growth, and it's also a good way of making sure that they will take a better care of their next generations. So there are within any space possibilities. And then I'll just go to the next one. We try to see how we can do it most efficiently, and of course we work with exclusions. We have the normal exclusions. Some things are more personal, like advertising. I think advertising is just broadcasting bad self-esteem is what they do. So you like to try to build yourself by purchasing something. It's not necessarily making your life better. And this is our list, and we're regularly refining it and checking it, but at least the way it is now, these are things we've taken out. And I try to transfer this to my life, because it's no point of like dropping one thing in the private life and doing it commercially or vice versa. Mm-hmm. So these are some of the things I've taken out of my life. Some has been changes, some have been with me for a while, but I think it's also, what should I say? I'm not consistent in everything, but I try to be. I use this as a guideline. So when I say
you are, Carsten, you are a very strategic and very aligned person, and you're living your values.
Thank you. I try to. Yeah, I try to. Sometimes I miss, but it's yeah. And then we can go into inclusion, because that's very much how I would like to be. So because when we take things out, it's also to take things in again. And this is also working on myself and to get sometimes. I think solitude is a super important thing. Sometimes to have the possibility to reflect. We have a small cabin in the mountain, which I try to go like once a month or something, just to be there 2 or 3 days completely alone, just for reading and thinking and writing to get clarity on my mind, which is useful. And then also the other thing is habits. Habits is a huge barrier to change. So I would say that's also one thing I try to change, and then of course meet new people just to challenge myself. And then when it comes to the company things, how we're doing it on inclusion is to specify very narrowly what we actually would like to focus on, and take away all the things which are not top of the focus. It doesn't mean they are completely excluded. It just means they're very low on the priority list. And after doing this for a couple of years, I see that what my heart burns for is to, within impact investment, we talk about additionality, where we make a change. And then is the place is, if nobody else is stepping there, then we are adding change. And I find that by starting companies. I think that's an underutilized resource for people with some assets. It's a low risk thing. We can start with little. We meet other people, so we don't need to wait for the startup and find a good founder and the pricing the company at a high valuation. We can start from the day one and refine the process along the ways. So that is like where I hope to put more focus going forward.
It's very interesting. Thank you so much for sharing. And it's how should I say, again, this is like the family situation. There is not a one size fits all, which is why I would not advise anybody to make this clear, to now start to go out and build your companies if that is not your strength. Like, people are different. In our course, for example, we start by teaching. So this is a very advanced case, I want to say. What we are starting to teach people first is that we teach them what kind of questions to ask of their wealth manager, to first, as a first step, get the best out of their wealth managers. And in a second step, to be able to ask the right questions to their investment managers or to potentially impact funds, so that you know that what you want is actually what you're getting. But of course, Carsten has gone through all of these exercises and then came to the point that the biggest additionality is actually starting social businesses, which is of course solving problems that nobody else would otherwise solve in the world. So, Eric, sorry.
Yeah. Just to add on that, like an example, 2 years ago, I was in Kenya, first time in Africa, and that was a CSP tour with fellow impact investors. It was great. And then I met a person. We had a one hour talk, and then we decided to start a company. And of course, when you're starting to send money to a person in Africa you met for 1 hour, you feel it's a kind of risk. I did due diligence on him, etc., and we cooperated. But now it's expanding. But initially, I also felt that if I was losing the money initially, I could try to say, like, it's not like it was not a high risk to start that way. And by now we have 7 schools and we have 35 employees there. We're training about 1,500 people per year. So and it's more or less cash break even. So it's possible without spending a lot of money, but with some time for finding the right people and to dare to go a little bit beyond, because it's changing your mind.
Yes, and actually here I would like to also go to something that I think you can just explain brilliantly. So when I'm working with our participants, I'm often going into the question, who actually are you? Who do you want to be? And also, who are you with or without money? And which seems to be a very, very challenging question for some of the private investors that I'm working with, because it's just the first time in their life that are kind of allowing them to ask this question, because it becomes a mask that they are growing up in all their life. So what is your philosophy on this? What can you achieve with and without money?
I think it's it's a very good question, because very many people, at least if they come to some assets, is that they are defined by the money. And that is like defining their own role, and everything they see is through a lens of money. But in any kind of company, it's a matter of that the company is an idea, it's the right people, and it's capital. And if you have access to money, you can also have an idea, and also you can be a good person. You can be a part of that. And one example for us, we've done some shareholder activism where we approached listed stock, listed companies, engaged in a dialogue, and then listen. People would normally, and I think so many people in the impact space, they limit themselves to be like capital allocated only, where they sit behind bars, they sit behind administrators, instead of visit the company. I mean, if you invest in a fund, try if you can have a meeting with the management in one of the portfolio companies. Go and visit the factory or whatever, get some learning, engage yourself, because it's very fulfilling both ways. The people there will very much appreciate it, and it's it's a learning curve, which is very useful.
Thank you, Carsten. Erin, do we have any questions?
We do. We have a lot of questions, and we are only going to get to one right now, but we will answer the rest in our Medium post. For all of those of you who sent in questions, thank you. So one question that was sent in at the beginning came from Mahavir, and he's asking specifically about projects in developing countries. So this is kind of from the other side. If you're an investee who has a really good project, how do you actually gain access to impact investors and the capital that you need to develop your project?
Yeah, this is very hard, because it's in the world today, there's a lot of money available, and there's a lot of good founders or ideas around, and that's a challenge. There are several accelerators in some countries, so that could be like a good path. where people can connect. There are also some conferences. But what I find challenging is also when I go there, and the moment I put on like the investor badge, people would just approach me with things that they would like me to invest in without. What I would like to see is to develop the ideas with them. And I don't really have a good, I would like to see better platforms for connecting across the world, because I think we have a responsibility to reach out. There are so many good human resources in developing countries, and they just need a little bit of support. They need a phone call, and they need little the money. Sometimes $5,000 or $10,000 or something can go a long way in getting something off ground and getting it started. So I think that's something which a lot of us could engage a little bit more into. But it's probably more our responsibility to try and reach out the other way, because it's easy for us. We're being heard.
Great, thank you, Carsten. So we have a couple of minutes just to wrap up right now. Again, thank you for attending, everyone. We'd love to just get kind of a roundup comment in the chat. What you guys, any comment, like a couple words, what you guys think, any ideas or suggestions, go ahead and write that in the chat. If Carsten and Britta want to just say a couple final words, and then I'll tell you about the next upcoming webinars.
Thank you. Yeah, I'll briefly share again my screen just for the key takeaways. So this is what we have been discussing. There are basically 3 main avenues to overcome the key barriers on the road to impact. And the first one is carve out the time and some resources if you're an impact investor to gain the clarity on the field, on yourself, and on what you want to achieve. Second, develop consensus within your family, starting with your allies and also with other stakeholders, and try to align them on tangible strategies before then going into implementation. And the third, it's also very helpful that you establish continuity, as we have seen in the example of Carsten. So in the beginning, you have an initial asset reallocation, but then have also a continuous impact portfolio development process in place. I also wanted to say, just before we conclude, if you want to know more about our program, you can learn more. There is, for example, a report that we did together with the World Economic Forum that is accessible online. I don't know if we can also send it out to the people who have registered afterwards. Okay, we could. So I think that would be an amazing thing. And maybe we could also share our video, which gives you a bit more information and a kind of an impression of what happens in our program. So I start sharing.
Great, thank you.
Yeah, I think my key advice is I did the Wim Hof method. For those who are familiar with that, it's a breathing and ice bath to strengthen the immune system. It's a bit uncomfortable. It's very useful now because I do it every day because of the corona to make sure. And the other one is the picture of my partner in Kenya, Geoffrey Ajiki. He's super good. But the key takeaway is get out of the comfort zone. That's just something I would encourage everybody to do every now and then. If it's once a year, twice a year, and just a little bit, whatever it is, but sometimes challenge yourself. That's my key, and it's very life enhancing.
Great, thank you. That is great advice, Carsten. And thank you both for being on the webinar. It was a great conversation. I think a lot of people have got a lot out of it, as we're seeing in the comments. Just to give you a heads up, everyone who's participated, we will be posting this on YouTube, and we'll also make an audio version and post it on SoundCloud in case you're more of a podcast person. And we have some upcoming webinars. So the next one is a week away. It's with Taeyeon Kwon, and it's on blended finance. It's from so Central European summertime, 3 p.m. to 4 p.m. And then the next one is with Britta again. Britta will be hosting.
Hope to see you.
Yeah, another really great conversation, this time with Sam Bonsi, who is he's at the Impact, and he will be sharing, or they will both be discussing turning your values into investment strategies. So you're welcome to register and come for those. And thank you for attending. Great to see you guys.
Thanks so much for your interest. See you soon.
Perfect. Thank you very much. Thanks.
Thank you.